So, appreciate everyone joining. Of course, you are on our webinar, Real Estate Investing with Marco. We are extremely excited to have our guests on today. Excited for you guys to meet Mr. Max and also get some great knowledge, great insight into the real estate market, uh, different geographic areas, what is the market conditions, all of that good stuff. Of course, my name is Marco Walker. I am the Vice President of Sales here at HomeRiver Group. HomeRiver is a full scale property management provider. We service 30 plus states in 60 plus markets across the country here in the US. We do manage over 25,000 properties across our footprint for close to 10,000 owners. So we're excited for you guys to learn more about us, but today it is about our guest. So I would like for Max to introduce himself. Tell us a little bit about yourself, Max. I'll pass it over to you.
Thanks, Marco. Hey, everyone. Thank you for jumping on this morning. Um, as Marco said, my name is Max Fitzgerald. I've been in the real estate industry for pretty much my entire professional career. I started as a solo agent in a very small brokerage. I'm based in Los Angeles. I was born and raised here. So started as a solo agent, and early on in my career, I started working with a lot of institutional buyers and eventually sellers, and just really got a very good education early on of just, what are these institutional buyers looking for? What is their underwriting criteria? And that was kind of my bread and butter for a handful of years before I opened up my own brokerage back in 2018. So ran that for up until January of this year. We actually rolled the entire company into real a couple of months ago. So no longer a broker owner, and now a team leader. That's hard for me to kind of continue to wrap my head around, but yeah, born and raised in LA, and really excited to kind of give some context here on the broader real estate market as a whole.
Absolutely. LA, you guys are a little bit spoiled out there, right? Great weather year round. So, California is always an interesting market in general that everyone usually has insight on California, want to know how to break into the California market or just understanding the mindset of a California investor, all of those great things. So I'm excited to have you on this platform to be able to share insight to the West Coast. You're the first person we've had on, I believe, from the West Coast. So this is awesome.
Okay, cool.
Absolutely. So before we get into, I would say just even just California per se, as a broker, as a CEO, team leader, all of the things you just alluded to, from a investing market standpoint. And there's so many times we talk about this topic, but it's always great to really get different perspective because we're all living in different geographic areas. So, I'm curious on your perspective right now with, interest rates, home prices, just the condition of the real estate market from your perspective. How is the market from your perspective, but also where do you see the market heading in the next 6 months to 1 year?
I don't know. But when I I always like to contextualize that question, right? And the appropriate answer is what is your time horizon on an investment, whether you're buying a single family house to flip, whether you're buying an apartment, right? If you hold something for 10 years, it's going to go up regardless. It's just a matter of your writing appreciation. But for the people that are looking to get in and out of the market in a 6 month period or a year long period, that's where you have to take a level of pause and really understand the underlying, fundamentals of the market, of your ultimate buyer, of whatever the investment criteria is. It is very much dependent on how long are you going to hold that asset for, and essentially what are you going to do to it to improve the value. if you're looking at a single family flip, for example, and it's an 800 square foot existing structure on a 7,000 square foot lot, and you have the ability to basically double the square footage of that single family, and it costs you $315 a foot to add that additional 800 square feet off the back of the house. And you can turn around and sell that at a $700 per square foot basis. Like that's really good margins, and that is you adding value. Um, and maybe you can be less sensitive to the time parameters of or the disposition strategy because it's just plain math. But if you're staying with the single family example, if you're buying something and not necessarily adding square footage, but you're redoing the kitchen and the bathroom, and that's your arbitrage, maybe interest rates can hike up because of the macroeconomic things that we are all dealing with. So maybe that takes a lot of buyers out of the ecosystem, right? So your buyer pool shrinks. So even though the kitchen and the bathroom is renovated, that in theory adds some value, you're just kind of dealing with less buyers, right? That are available for purchase. Same can be said about a multifamily, building, right? It
Absolutely.
depends on how are you repositioning that asset, how long are you holding that asset, what's the ultimate buyer for that asset after you're done with your fix up or your investment or however you're tinkering away. So it's a complex answer, but none of us really know where the market is going to be in the next 6 or 12 months because there's just so many things out of our hands. But as long as you're sort of diligent with your underwriting and the fundamentals of how you are evaluating a potential investment, that should really kind of dictate the ultimate outcome.
Absolutely, couldn't agree more. I think there's a ton of I would say industry experts, right, that get onto platforms, whether it's a webinar, whether it's a podcast, and talk about the market conditions and where they are forecasting ultimately that the market is heading. I agree with you as far as that investor. Whether you're a starting investor or you're a seasoned investor, what I'm hearing is that you need to understand your lane. You need to understand what is your strategy. And at the end of the day, right now in this market condition, the numbers will be the numbers, and this is the numbers for this particular market. However, if the numbers make sense, no matter the market condition, whether it's the market of COVID years, the market of these years, the market of the recession in 08 or '07, at the end of the day, you need to understand the financials behind the deal that you are looking into. And if it makes sense, then move forward. If it doesn't make sense, then maybe it's time to just hold and wait. So completely agree there. As we talk about the market, I've always been someone who's been very, very, very curious about California in general. And just overall, I'll say I've lived right now, and I live in Dallas, Texas, but I've lived in Birmingham, Alabama. I've lived in St. Louis, Missouri, where I'm from. I've lived in Atlanta, Georgia, and been to multiple states within the Sun Belt where you see a ton of single family investment, right? As far as with rentals and scattered site investments. Now you're seeing more build to rent communities and things of that nature, which is awesome, right? Providing more inventory and housing for people like you and I who need somewhere to stay. So all good things there, but one of the perceptions out there, and maybe it was a reality as well, is that people in California, you guys make all of this money, right? And, because of their salaries, they go out to some of those cities and states that I've named and become investors and they buy properties in those areas. So it really lends to that California is not an emerging market that people or investors should invest in because of how high the prices are within California or the West Coast in general. From that standpoint, are you seeing more investors really dial into the California market, the LA market, and start to really aggressively invest in those particular markets? Not saying that they don't in the Sun Belt still, but really invest back into the West Coast like in years past.
Um, yes, comma. not as much like 2015, 2016, there was a lot more institutional investment than there is currently in the 2025 landscape. Um, and from a pure underwriting perspective, right, I think it does, cap rates are so suppressed, especially in LA, right? I mean, the blended average for cap rates in the city is probably a 4 cap, right? In areas like Beverly Hills or Santa Monica, right, your A+ areas, you're buying apartment buildings at like 2.5 caps. Versus you can buy that same 20 unit apartment building at a 7 cap in Florida, right? So if you're a cash flow investor, there are definitely better investment areas across the country. If you are, again, just looking for cash flow, you don't really have to reposition it much, right? It's just kind of a turnkey asset, and you know what it spits out. Like, it's a very stable thing. But I put the comma in there because there's still a ton of institutional money flowing into LA, and specifically the neighborhoods. And I'm going to talk about LA um, specifically, but this is going to be the same general concept that you can apply to any city that you're wherever the audience is in the country. So there's areas in Los Angeles like Culver City. You may not know where that is, but it's probably 20 minutes east of LAX, maybe 30, 45 minutes, depending on traffic. But Culver City, when I was growing up, it was kind of a D+, C- kind of neighborhood. There wasn't a lot there. It was a bunch of just industrial buildings. It was a very nice part of LA, but um, location wise, but there just wasn't a lot there. So as areas like Santa Monica and the west side of LA started to kind of get more employment opportunities and a lot more people living in those areas because of those employment opportunities, things have kind of started to trickle east, right? So when I was in middle school and high school, Culver City was one of those areas that people that were priced out, whether you're buying an apartment building, whether you're looking for a development site, whether you're looking to relocate your company from an office building, right? Santa Monica on the west side was starting to get very expensive. So Culver was the next kind of major city to benefit in that migration east. So when I got my license and started working with institutional folks, Culver City was a very established city. Like, houses were expensive, apartments were expensive, development sites rarely penciled unless you were very kind of bullish on your strategy. Um, but the city right next to Culver is the city called West Adams. West Adams had a lot of things going for it. Again, it was kind of a D+, C- neighborhood when I was, got my feet into real estate, but you had a metro line that ran from downtown LA to Santa Monica. So you had transit opportunities that ran right through the city. And you also had a lot of zoning benefits that the city enabled. So in LA, it's called TOC, Transit Oriented Communities. So as the city was planning out, saying, hey, we've built all of these light rails that connect the city, how do we incentivize developers to basically build around train stops and bus stops and all these things? Well, let's give them these great density bonuses when they're looking at ground up development, right? So we'll give them a 70%, an 80%, a 60% density bonus on top of your base density to make that investment that much more profitable, right? So that was such a catalyst that allowed areas like West Adams, where you could buy a single family for 500 grand back in 2015, 2016, and now that same single family is probably 1.4. So hyper appreciation just because Culver was so expensive. And like, if you're a family that didn't have $1 million budget, right, but you worked in Culver City, you could say, well, that same 3 bedroom house in Culver is going for 1.2, 1.3. I could buy that same 1.3 house or 3 bedroom house in West Adams for 600 grand, and I can throw an ADU in the back and rent it out. So that's where the basic fundamentals, the basic economics right, allowed the institutional folks to say, holy moly, because of the TOC, because of the density bonuses, because of the migration and the appreciation, because Apple moved into Culver, because Amazon moved into Culver, right? These huge
Absolutely.
employment drivers. Um, that's where the institutional folks really kind of set their crosshairs on this area. West Adams specifically is good for all of these different reasons. You have transit, you have density, you have employment, right? The fundamentals are there for us to really accurately deploy some capital and realize a good game.
That makes sense. Wow, that's the appreciation that you just provided great insight to. That is, I mean, going from 500,000, like you said, in 2015 to 1.4 million potentially now. That is, we were seeing that across many different cities, maybe not that type of appreciation, but, similar numbers in some cases. So definitely appreciate that as that insight. One thing I wanted to, and you've really answered this question, but I want to really peel back the layer just a little bit from more of a person like you and I, right? We have our savings, we have our maybe our retirement accounts, et cetera. And we're like, man, you know what? I want to step out there. I want to invest. Or I may have 4 or 5 houses that, I own. I'm not institutional, right, where I have private equity money and I can go buy a ton of homes, but I'm just a regular guy, a regular woman, a regular person that wants to diversify my portfolio and truly get into this real estate investing game, right? So, in evaluating potential real estate deals, what investment criteria for people who may not have that true knowledge of the financials behind real estate investing, what would be the just some top line, high level criteria that you would give them if they are truly interested, not necessarily in flips, but in long term holds? How would I
Yeah.
look at that? What's some criteria you can share?
Such an excellent question. And I know that's the majority of people probably on this call, right? So if we're not talking about a single family flip, because that's very, very easy to conceptually think about, um, let's talk about if we're just looking at a small multifamily property, right? So number one, you got to know, is this thing rent controlled, right? And how, in the
Ooh,
state that I'm investing in, are they a tenant friendly state? Are they a landlord friendly state? In
love
Los
that.
Angeles, it is a very tenant friendly state, which makes repositioning multifamily properties very, very difficult, right? You have to just it's hard to buy those tenants out. There's a lot of paperwork that has to be submitted to the city. The tenant basically has first right of refusal to cancel any sort of cash or keys agreement. So you kind of need to know the regulations from a government perspective, right?
Gotcha.
But assuming you're not in a state that is very tenant friendly and there's a very balanced uh, relationship between a tenant and a landlord, then you kind of have to look at things a couple of different ways. Like, are you buying for cash flow? And if so, um, do you have to reposition your units, right? Do you have to bring those things up to market value? That's a very easy thing, and that can be accomplished in looking at a deal before you even make an offer, right? Like, what are the current rents? What can they be bumped up to, right? What's my cap rate if I'm backing into, a 30% expense ratio? Super easy. But to kind of take it one step further is um, small multifamilies are oftentimes really good candidates for covered land plays, right? So let's say that we're looking at a 3 unit, like a triplex on a 9,000 square foot lot. So existing triplex, maybe built in the 70s. But over the last 10 years, that the zoning went from an R3, which allowed for those 3 units on the site, to maybe an R4, which, instead of 1 unit for every 250 square feet of lot space, maybe it's 1 unit for every 100 square feet of lot space.
Mhm.
So you can say, okay, cool. Well, I want to buy this, hold it for at least 10 years. Maybe I want to will it to my kids one day. But the current financials are, this thing shakes out to a 5.5 cap that covers my debt service and I'm cash flow positive $800 a month. Awesome. But because of the zoning change, I can now, if I want to, add an ADU in the back, right? Which is going to cost me 250 grand to do, but it's going to add an additional 1,700 bucks a month on top of free cash flow, right? So covered land plays are awesome because you're buying something that's already cash flowing, but you have the ability to add more units, right? To only add to that cash flow. So for the kind of the mom and pop investor, that's usually the best type of investment because, going through a ground up development or buying a single family on spec that you're going to flip it and sell it, like those always make me personally nervous because again, the market dynamics are out of our hands, right? If they
Exactly.
continue to raise all these tariffs, which causes lumber prices and all of the things that we need to do to build these houses to go up by 40%, right? That's going to significantly affect my underwriting, right? And
Absolutely.
so covered land plays are awesome. It's something I'm always pushing people that are, my age who have, some savings and want to deploy that to real estate. That's usually what I'm on the lookout for.
Perfect. Appreciate that insight so much. Just to educate our audience, right? During each question, right, you talk about cap rates. If you can give us, just for on the audience that may not be as familiar with kind of that term and what it means, if you can, in layman's terms,
Yeah.
break down what is cap rates and how does that associate to the financials and real estate investing?
Sure. Cap rate, short for capitalization rate, and it's a very simple equation. It's just the net operating income of the building divided by the property's value. So, for example, if we're looking at a building that spits out $100,000 a year in NOI, right? That's your cash flow after your expenses, but before your debt service. So it's always calculated on an all cash basis. So $100,000 is the not the denominator, but the top number. And let's say the building is worth a million bucks. So it's $100,000 divided by a million. That's going to be 10, right? So you can say, okay, on an all cash basis, this $1 million building is trading at a 10 cap, right? Which means I'm basically making a 10% return on my $1 million investment, which is amazing. If you find a 10 cap, buy it because they're very rare out there. But that's basically what a cap rate is.
Perfect, perfect. Thank you for that education. It is extremely helpful, right? And going into that level of detail. So I want to kind of transition. Obviously, you've been in this space for quite some time. Um, CEO, owner, team leader, started your own brokerage with Kraft and Bauer, but you also have diversified as well. And one thing that I loved on our previous conversation is you being able to work inside of your lane, inside of what you do day in and day out, being an owner, a CEO of a brokerage, etc. But also, you notice that there was a hole in the boat. You noticed that there was an opportunity for you to help the marketplace, for you to add value to the marketplace as far as from a real estate standpoint with real estate brokers, real estate agents. So I want to transition to, how did you really start a very innovative company, innovative idea called StackWrap, and really, it's a new online dashboard for real estate brokerages, and I want you to really enlighten us about, really what this is, what the software does. And for anyone that's maybe not a broker or brokerage, or you don't own a brokerage where you may not need per se the software, this is still very valuable to kind of hear this story from Max. Why? Because he saw a hole in the boat. He identified a problem, and then he plugged the problem, which is what we're doing with any type of investment that you choose to do, and that's how become successful. So I'm so interested in this story and the audience hearing it.
Oh man, thanks, Marco. So, so when I started my brokerage, right, you're an independent shop. You're kind of, you do whatever you want, but it's also very hard, right? So, for my agents, we offered them the CRM that of choice, which in our case was Follow Boss. We had DocuSign, we had Ylopo, we had Sisu, all of these amazing tools, but didn't have a great way to bring all of those tools into one spot. I wanted them to be able to talk to each other from a tool perspective. I wanted my agents to kind of single sign on into one cohesive ecosystem to access everything that, my that I offered them as a brokerage. So built a very early version of StackWrap and launched it internally as just kind of a tool that my Craft and Bauer agents had access to. And it works super well. So about a year and a half after I launched it, I said, well, I mean, I'm probably not the only person on the planet that needs a better way to organize my tools. So turned it into a company that now is StackWrap. So it allows a team, a brokerage, an organization to bring all of their internal tech, tools, systems, workflows, into one spot and really organize things however you want that your agents or your employees or staff to interact with the tools. So, in a cohesive nutshell, that's what StackWrap is. But yeah, Marco, to your point, it was just, it was a vulnerability in my business that I recognized pretty early on because I was losing a lot of recruiting meetings, even though, I thought I had, offered my agents good stuff. It was just like, well, you kind of have to bookmark everything, right? There's a little bit of disorganization, but trust me, the tools are all great. So, because, I wasn't converting on my recruiting meetings early, like this is 2018, 2019, we were a very small and still growing company. But it was a vulnerability in my business that I knew I needed to address and ended up turning it into a standalone product.
I love that. Love it. And ultimately, like I said, you identify the problem, but by creating this tool, you forced operational efficiency, right? You're giving your anyone that uses that particular tool, they're getting time back, right? Because they're not sourcing through multiple platforms to do the same job. It's all at their fingertips, which truly enables them to operate a little bit more efficiently and smooth in their processes, which then that is savings, if you will, right? That goes to the end user or to their clients, right? Which is going to be sellers and buyers, so that they can provide a more in-depth service, a more responsive service to them. So your software is truly an impact, to the real estate industry as a whole. So, that's absolutely amazing. Max, I definitely appreciate, you taking the time out to meet with us today, to share some insight, to share, just every single thing you're doing, in the West Coast markets, and how you're a value add to the real estate industry in general. So, I want us to put up, how do we contact you? I'm pretty sure people are excited and interested in reaching out to you. So if you can just share the best ways to get in contact with you, et cetera, and partnership opportunities, all that good stuff.
Yeah, so send me an email, max@craftbauer.com. Mention that you saw me at this webinar. Happy to sync up and you know whatever floats your boat. I'm happy to help. If you're interested in StackWrap, it's super easy to also get in contact with me, max@stackwrap.com. So feel free. I'm always I try and be an open door. Especially for your audience, Marco. So that's probably the best way to contact me.
Perfect, perfect. So Mac's contact information is here. His email is the best way to reach him, but also please make sure you guys follow him on LinkedIn, as well as take a look at his website. Of course, us at Home River Group appreciate everyone joining. Feel free to follow us at HomeRiver Group on LinkedIn, as well as Facebook, as well as Instagram. If you guys want to get in contact with me directly, also feel free to reach out to me, Marco Walker, on LinkedIn, Facebook, Instagram. Shoot me an email. We're very, very accessible. So again, thank you all for the time today. I always like to leave every audience with this, which is I truly believe that if you put in the effort, it will equal results, and your results will always equal opportunity. And I think Max is a perfect example of his effort equaling results and an equaling opportunity. Thank you all for joining today. Thank you, Max, for this opportunity to meet with you. Everyone, have a great rest of your day.